What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over how to plan a trade or set up a trade plan. All right, catch you on the other side. All right, guys, so we're going to make this video very quick and very straight to the point, and we're going to jump right on into it. We're going to look at stock DARE. Now, this stock is a failed chart pattern, but what I'm going to show you is how you properly, or how at least I and many other traders set up your trade plan if you're going to take a trade on this stock. All right, so we're going to look at this 3-minute chart here. We see these are 3-minute candles. We see that the stock opens up and it has a range from 296 or so to 266. Okay, so we're looking at that 30-cent range there. And then we have VWAP coming up here, this purple line. The stock makes that high, pulls in on this 3-minute candle, hits VWAP, and bounces off of it. Okay, now there's two ways of playing this stock at this point. You could jump in using that VWAP as your stop right here, just randomly, or you can, obviously it was really good, there was decreasing volume on that pull-in, and then real nice volume on this candle here as we pushed off of VWAP. Okay, so that would be your second way of playing this stock, which would be during this consolidation area here. You see this kind of flag wedge forming here above VWAP. All right, most people would jump in somewhere in here. Okay, somewhere in one of these candles, 290s, $3, you know, right in front of this high a day right here. You see how this high, let's see if we can make this a little bigger. You see how this high a day right here, it should normally hold on support, and it's holding on support right there in these candles. That's great. That's what you want to see, okay? And you want to see it on the decreasing volume, okay? Right there, bam. That's $3, 295 area, okay? But now, what a lot of people will teach you out there, especially like momentum traders, is to just buy that breakout, which is bought here, and then, you know, start selling into that. Well, you're buying that breakout, so you're just buying at 298, and you know, usually this is bought by scalpers, so they're selling at 305, 310, you know, 307, 311. They're just taking profit as it goes up, you know, with a boatload of shares. But if that's not your style, right, then you're not buying that breakout, you're buying the pullback. Now, you can't just buy this pullback here instead of trivial stop of like 10 cents. Why would you stop out? Let's say you bought this here at 305, right in front of this high a day as it's holding support, and it pulls back all the way to 292. You got stopped out, and the stock just bounced right back up. Why? Because VWAP is here, because you're in front of this high, because the volume is decreasing. Okay, this is a strong break through this high, a very strong break. Look at that volume bar. If you're trading a chart pattern, then you have to set your stop according to that chart pattern, not just a trivial stop of 10 cents because you have 1,000 shares and you don't want to risk more than $100 in the trade. If the chart pattern is telling you that you need to give yourself a 20-cent stop, for example, then you don't want to lose $200. You only want to, you know, risk 100. Then you got to take less size, 500 shares, for example. Okay. Or you want to take a smaller position, like a starter position here, you know, in front of this VWAP area and in front of this high a day. So you want to try to get a starter position, maybe there in the 290s, $3 area, and then add as we start to break out again, right? Because you would normally want to see this consolidate here, maybe tap VWAP and then bounce back up, and your new target's going to be 350, right? Because you're going to break over these 320s. So you're looking at 330s, 340s, 350s, right? You would probably take a starter there, add maybe on the break of this pivot in 320, and then start selling and taking profit 340, 330, 340s, 350s, and maybe leaving a little piece to see if this is going to squeeze to $4. Obviously, this trade would have failed. That's why a starter position is usually what you want to do, right? Say you want to have 500 shares, you take yourself 200 shares here, you know, at $3, you're risking all the way down here to 280, so you're risking 20 cents, you know, for the chance at making 30, 40 cents, 50 cents, right? Because you're going to scale out. So the risk reward makes sense. If you're risking 20 to make 40, then obviously that makes sense. You want to take some profit off a little bit as soon as you break that high, more or less, or right in front of it. You can also, you know, kind of like mitigate your risk that way if you think it's not going to break out, right? But you can't just set those random stops because they don't work. You have to have your profit target, in this case, high a day, right? So you're long from, let's say, 295, $3. You can take some profit here at 320, 325, or just as it breaks over, which it probably would as it starts to get close there. You got to be ready to take some profit, and then you take more profit as it squeezes higher, all the while giving yourself the pattern, room to work itself out. Now, obviously, this is a failed break. This is a failed pattern because it didn't work, but we know patterns work. That's why we trade patterns, right? Even this pattern right here would have been bam, VWAP hold support. If you're really aggressive, you jump in right on this candle and then you sell into this push. I mean, let's say you jumped in at 272, you're risking down to 255 or so, right? You got what, 23, 22 cent risk there, and your upside is another 25, 30 cents as we squeeze up even more. So you got to stick to the pattern, and that's just the whole point of trading patterns. You got to let them work themselves out, and it took me a long time to figure that out. I learned it from other traders, and it took me a long time emotionally to be able to actually let my patterns work out. One of the things that helps me is setting hard stops when I take my first tier, my first starter position. I put a hard stop out a lot of times, and then as I start adding, as we're starting to break out and start taking profit, I cancel that hard stop and I start taking my profit, scaling out little by little. As you saw in one of my previous trades, I think it was ATOS. I'll link it up here for you towards the end so you can take a look at that and you can see how I scaled out of that. And my risk was about, if I remember correctly, 25 cents, right? And I took profit at 20 some odd, 30, 40, 50. I think I took some at 60, and I took some right at $1, and that's $1 per share as I scaled out. So I took 3 sales. I took one sale, which is the bulk, a little bit too early. Then I took another sale around around 60 cents up, and then I took my last one right at $1 up. So that's how you want to work these patterns. All right, so I hope you learned something. If you did, smash that like button. Remember to subscribe, give the video a like, and go ahead and hit that notification bell. I will catch you on the next one. Remember to drop your comments in the comment section below.